I'm going to welcome everybody to the Black Diamond Real Estate Investors weekly Tuesday night check-in, really just an ongoing discussion with the COVID-19 as the partners, Jared, myself, Daniel Strone, and Bellamy, we decided a couple weeks ago that it wasn't just something that was good to do, it was kind of a responsibility that we had to keep this conversation going week to week as things are actually changing week to week with COVID-19, both from a health perspective, but more so on the economic perspective and public policy perspective. So we wanted to make sure that everyone was well informed and educated with the changes that are here and also best prepared to handle them. Last week, we went over a few different things, how to prepare with what we are seeing on the fix and flip side, on the rental market side with Brian Lucier. He came out with his tenants. We had a banker come out and discuss a little bit on what he saw with the initial round of the PPP programs. This week we have a lineup of also amazing speakers, including someone to talk about the what was passed yesterday from Governor Baker's office with the law on the evictions, the stay on evictions and foreclosures in the state of Massachusetts. So I'm going to let Jared take it over from the for the formal intro and the format. And I think you guys will have an awesome meeting. Be sure to grab your beverages, and here we go.
Hey everybody, how's everyone doing? Hope everyone can see my screen. Nick, can you just confirm that I can?
Confirmed.
Awesome. All right, everybody. So if you were here last week, we're changing up the agenda a little bit. It's relatively similar, but I'm just going to go over the agenda of tonight, how the meeting is going to go, how you ask questions, how you propose deals that you have, and just general announcements. So the way this is going to work tonight, a little different than last time, is we're going to have the speakers present. They are going to go 5 to 10 minutes apiece. At the end of their section of speaking, we will then have a question and answer. At the end of all the speakers speaking and all the question and answers, we will have a deal section. I know one of the big things that people kept asking me last event is where is the deal section? So we did try to add to the end. If you have a deal, please stay towards the end and present it for you. The meeting is recorded, and like the last one, we will have it on YouTube, Facebook, and all of our social media for you to take a look at, as well as our website. So if you have questions on that, go to any of the above to get the last recording, and we will start from there. Our next meeting is going to be next Tuesday, and we are trying to do this for the entire month of April, which will be, I think, that will be the last Tuesday in April to have a meeting for us. But without further ado, I wanted to talk about the speakers. We're going to have Frank Tees. He's the CEO of Milliard Bank. Sorry about that. We're going to have Richard Vetstein. He's a lawyer. He's going to be talking about some of the new regulations that just came into effect by Charlie Baker. We're going to have Lynne Bagby. She's the division manager of asset preservation, and she's going to be talking about some new regulations around 1031 exchanges. And we're going to have Michael Foster, who's an insurance risk advisor, and he's going to talk about some of the upcoming insurance claims that you might be able to take. And correct me if I'm wrong while you're talking, Michael, but about what you should be preparing for as an investor. So without further ado, I'm going to give this over to Frank. I think I can unmute you. And we are going to go from there. Frank, are you available? Oh, there we go.
There we go. I just.
All right. Jared, thanks. I want to thank Ann Bellamy for inviting me to speak today. Ann sent me an email and it got buried amongst the hundreds of Paycheck Protection Program emails that us bankers have received.
I mean, we all have to see what's the impact, right? So I'm not sure.
Over the course of the last week, she suggested some topics I could today, including how a community bank can help investors.
Hang on, Frank, I'm going to mute everybody. Hold on.
Me. All right, great. Thanks. Banks can assist investors in today's market and also talk about the COVID program that was put forth by both the SBA and the U.S. Treasury. First, a little bit about Milliard Bank, and sole slide I provided today. I could not find at a slide presentation that would be probably appropriate for this group. Couldn't put my hands on it. So you've got our generic slide of the 4 folks within the Milliard Bank walls that participated and facilitated the Paycheck Protection Program. Milliard Bank is a new de novo bank that was established last year, open for business December 23rd of 2019, capitalized by 211 shareholders, many of whom are local here in the national marketplace, and we collected $21 million in capital. I've been a lifelong community banker. I see a colleague of mine here. I don't see her anymore as the screen shrunk a little bit. She does the same thing we do here in the market, and that's working with folks and providing educational opportunities when we can and fulfilling their dreams of securing commercial financing. I'm going to start by telling you, when searching for a bank, size does matter. You need to ensure that you are aligning yourselves with the right size bank. In chatting with Ann earlier, I suggested, don't walk into a Bank of America, for instance, looking for $1 million loan. While Bank of America serves a great purpose, and by no means am I speaking ill of them, they're the place you need to go if you want to borrow $20, $40, $50 million. If you are looking for $50,000 to $5 million, you want to walk into a community-oriented bank. And it could be a small, several $100 million bank, or it could be more of a regional, multi-billion-dollar bank. You're going to get answers there. You're going to find bankers who are flexible. As bankers, we sell money. Most community bankers learn how to be flexible and listen to the clientele, listen to what they're asking for, and design a solution around them. We don't have a box of commercial loans with the same standard terms. We have flexibility. We have the ability to be agile. If you're working with a larger bank, going back to that Bank of America mentality, those decisions, while sometimes are made locally, oftentimes are not. They are underwritten in Charlotte, North Carolina, or other parts of the country. And likewise, when decisions are made to not extend loans to a certain industry, for instance, restaurants or something like that, it's made by somebody in a different part of the country that doesn't know the client, and they just flick the switch off on that type of lending. So by banking with a community-oriented bank, and you can look at the FDIC website and look at capital sizes, asset sizes, and so forth. And my recommendation would be, don't stick with one bank. Have 1 or 2 or more bankers that you're having conversations with. Share your financial information with them as often as you can, even if you're not looking to borrow money. I think it was Mark Twain that said, bankers gives you an umbrella when it's sunny out and then ask for it back when it starts raining. That's true with money as well. We need to see your information in good times and in bad. We need to understand you as a person. So don't be shy with sharing those tax returns when you're not looking to borrow. Share those personal financial statements. Have those conversations so your banker can get to know you. That helps the banker be as flexible as possible. Secondly, with respect to the COVID issue, I don't recall, it was the Thursday before, so it was like March 25th-ish, and I was in my kitchen. I had just gotten home, and I was watching Secretary Mnuchin tell the world that next Friday, April 3rd, you're going to be able to walk into any bank in America with an application that didn't yet exist and apply for monies under the Paycheck Protection Program. I nearly dropped my glass. I couldn't believe he said that, because they provided, they being the government, zero direction with respect to this program. I will give them tremendous kudos. They did a good job with the application. They did a pretty good job with the process. As a brand new bank that literally opened up 4 months ago with very few loans on our books, we were not saddled with delinquent loans or other things. We could turn our shop around, as many other banks did, and quickly intake these Paycheck Protection Program loans. These loans, as you may or may not know, are 100% guaranteed by the US government. They're underwritten through the Small Business Administration 7A program and allows for that 100% guarantee. Oddly enough, as a banker, we're extending loans that are non-guaranteed, that have no collateral, that we have done no financial underwriting for. Very odd. My CFO doesn't like the fact that we're extending loans at 1% with no fees. But as a borrower, as a taxpayer, and I've had many conversations, including several today, get in line and get this money. The Senate is voting today, if not, they've already voted on the next phase of Paycheck Protection Program monies under the CARES Act. The House, I believe, will vote on Thursday. Does that mean we'll get it Friday, Saturday, Sunday? We don't know. But we and every other bank in America will likely be very prepared. It is simple to apply. If you simply Google the CARES Act or application, I think it's 2384 is the form number. It's a simple 2-page document. If you can fill out your name, social security number, if you can do some simple math and write your initials in, you can apply for one of these loans. And I would encourage you to start doing so now. And also call your banker, ask if they're participating in the program, ask who you should speak to. Don't automatically presume you're gonna get approved. We had many folks come to us who banked regularly with other larger banks that unfortunately were overcome with applications. We were able to process these loans quickly, and we didn't already have tens of thousands of clients on our roll. So identify that bank, identify the materials you need, and be ready, because the money's coming. It's free money. Don't think twice about taking it. If you use the money as prescribed for under the Act, which means you use at least 75% of it or more towards payroll, and no more than 25% for rent or utilities and so forth, the loan could be forgiven. The terms of the forgiveness of debt have not come out, although I think Secretary Mnuchin's been quoted several times, so it's on YouTube by now, that the SBA or the government will forgive this debt. We are communicating that with our folks as soon as we get them. We have over 100 people that we extended loans to. This is not an advertisement for Milliard Bank, but if you want to know what information you need, you can email us at CARES, C-A-R-E-S, at millyardbank.com. You're going to get a simple bounce back. Wait till tomorrow afternoon, because we're going to update the information as we get it. It has the old information, but it at least has the link for the application, and it tells you basically what you need to apply. Go apply to any bank that you're comfortable with. With that, I'll just again stress, when dealing with a bank, be as open and honest and transparent with your lender. Have a bank you're dealing with, and then have another one warm, because at some point your bank or banker may decide they have enough of these types of loans and may not approve you. So having several relationships is a good thing, and always share your financial information as it becomes available. And Jared, you said I can hang out if there are questions, and I'm happy to take questions as they become available. I can't hear you.
Oh, sorry about that. I said, thank you very much, Frank. Everyone very much appreciates the information. I'm going to start reading from the chat. If anyone has questions, please post it in the chat or send it to Nick, Ann, or Daniel, and we will privately, and we'll try to read it in the chat as well. So it says, do you know if independent contractors / self-employed can get both PPP and unemployment? Know that we qualify for either, but if you get one, can you not get the other? And that is from Cammy B.
I do not know that answer. I'm sorry. It's a good question.
I can just jump. There's a few questions in here specifically, as we anticipated, on the PPP being one of the most popular topics right now. And I would, Frank, if you're okay with it too, and for the benefit, we had a couple CPAs on a separate session last night that did address a couple of these. I'll just go through what I know, but I'm not a banker, I'm not a CPA, I'm not a lawyer, I'm not anybody who's actually remotely smart. I'm just me. But I just to clarify a couple of points on that one specifically, Cammie, is that if you qualified for unemployment and you filed for unemployment, the moment you got income from any other source, including the PPP, including the EIDL loan, including like any other benefit, you have to report that to unemployment, and it might affect your unemployment benefit or take it away, depending on where you get those funds. And Dave Matthews, that same line of questioning, this is again from the CPAs last night. What materials are needed for sole practitioners who take draw, not payroll? My understanding and what I heard from last night on the talk on our channel, they said you need a Schedule C for 2019 on your self-employment income. And if you don't have that, you have to make one up with your CPA to apply. I'm assuming, Frank, is that about accurate with what you would need from a sole practitioner?
Absolutely correct.
Okay. Sorry, Jared, keep going.
Sorry, I keep muting myself. I have one from Tim McDonald. It says, I have a one-member LLC. He has a typo, but it says most of his current revenues from rent, but especially last year, he was very active in property management renovations of properties. Would he qualify for either PPP or the SBA emergency loan? I'm not sure there's enough information there, but if you have an answer, Frank.
Yeah, the answer is there's something there. I would encourage this person to speak with his banker. There's money to be had for sure. And the emergency fund, I believe, if you apply, you get it. But good luck applying and good luck waiting. I know people that applied several weeks ago and still haven't heard one word from the SBA.
Awesome. And you're muted. I think you're trying to talk.
You skipped one up higher from Syed. Do we have to have employees as of January 2020 to apply for this?
Correct. The rule is you needed to have been in business by February 15th or earlier. They changed the rules along the way in terms of what income stream you use. They initially said use recent payroll, then they said 2019, but so long as you were in business by February 15th, 2020, and you had employees, you can qualify for funds. But remember, it's average payroll. So you can't say that because you had somebody for 2 weeks that's an average monthly payroll.
I have a question from Nawaz, and it says, can landlords who built a portfolio over the years and filed tax returns as passive income, how can they get SBA loans to pay for expenses while no rent may come in?
That's rather difficult, I think, given the circumstances. It has to be, under this particular program, it needs to be to replace payroll or income. They can't pay for expenses other than utilities associated with their business.
Do we have any more? Does anyone have any more questions? I think that was the majority of them. Did anyone get, Ann, Daniel, Nick, did you get any private messages?
Did not.
I'm going through mine as we speak. I don't have any privates yet.
Need to have an LLC.
Oh, do you need to have an LLC to apply for these fund reliefs?
You do not. You can have any ownership structure to include S Corp, C Corp, LLC, sole proprietor, or anywhere in between. It's how we determine the dollar amount that you qualify for, which is important. Just bring all the financial information to your banker and they should be able to sort through it and get you the number you need.
Awesome.
Here's one from On. If you have an Airbnb business, I assume that means, can you apply if you have an Airbnb biz? I think that's the same as the previous question about rent, isn't it? Or because that's just short-term rental.
Oh, it says if you have an Airbnb business that loses income because of COVID, should you apply?
Oh, okay. I didn't see the rest of it.
So long as you can prove you were in business before February 15th and that you had earnings, whether it was W-2 or otherwise, yes, apply. Apply until they tell you don't apply.
Okay. I have one that says, I was told by DCU that I qualify for the program, but because they showed losses, you could not get the loan. If you show losses, are you still eligible for the program over the last year?
Sure. This program has zero to do with the financial wherewithal of a company. So whether you made money or lost money last year is irrelevant. Your credit score is irrelevant. Your collateral base is irrelevant. It is solely based off of what you put in your pocket in terms of earnings or in the pocket of your employees. Remember, this program was built to ensure that folks had money over the next 8 weeks to continue paying their bills, putting food on their table. So if you had a loss or a gain, does not matter. It's whether you paid people to come to work, including yourself.
I think this is going to be the last two for Frank, but these are kind of together almost. One says, if you're an independent contractor, no other employees, can you apply? And I think you've covered that already. And the second one says, if you're a sole proprietor, can your pay be payroll, or must you have at least one additional employee? So they're kind of in the same breath.
Yeah, so sole proprietors, basically we would take, if they take a pay check, we would use that, but we would ultimately use the bottom line number that they reported on a tax return, divide that by 12 and multiply that by 2.5, getting that average, getting that loan amount. That's how it would work.
Awesome. And Nick, Daniel, do you have any last questions that you've received that I don't want to skip over?
We've got a whole bunch more questions. I don't know if they're for Frank or not.
Yeah, the one that might be a quick one, Frank. Are you guys going off of those what is it, NAICS business codes for your loans that you're spinning?
Sure. The SBA, I mentioned earlier, the SBA and the government did it right this time. They didn't communicate all the details very well, but in terms of the input, we're taking applications and then inputting it into a system the SBA created long ago. One of the required fields is the NAICS code. We used to know it as the SIC code, but the NAICS is a 6-digit identifier with respect to industry. Usually that's found on the tax return, depending upon the type of formation, or we'll discuss it with the borrower. The NAICS code is important. If you come to your banker with your NAICS code, you're going to make him or her pretty happy.
Gotcha. There's a couple. Dorena mentioned that there's a few real estate people who are denied outright based on their real estate NAICS code. And I guess my experience has been to Dorena to share, it literally all depends on your banker. I've had a bunch of colleagues nationally that have applied and got through. I've had other colleagues apply that had that same note saying, if you're involved in these NAICS businesses, you will get denied. Have you seen any of that yet, Frank?
Yeah, it's funny. We approved everybody that came here with the exception of one person, and we couldn't figure out how to get it to fit in a box, but I could very easily see how some banks may unilaterally decide, no, we're not doing this because we do not feel it meets the spirit of the Paycheck Protection Program. And I've heard stories more so along the lines of, boy, I've banked with TD, again, not picking on TD, I just happen to use their name.
There's the jab. I like it, Frank.
I've banked with TD my entire life and they didn't return my call. And I defend TD and I say, listen, TD is a international bank. They have hundreds of thousands, if not millions of clients, within the US or New England and US. Give them a break. They only had so much man and woman power they could put towards this program. But again, I need to impress upon you all, be prepared. The money's coming. The sooner you're prepared, make it easier for your banker, the easier you'll get money. Let's face it, if you are faced with a transaction that doesn't require a lot of work and you can get a lot of money versus one that requires a lot of work, you're going to do the path of least resistance. Bankers tend to do the same thing.
So I've got a question for Jared here. We have a few more questions for Frank in the comments, but we're moving. Do we need to move along for time or
yeah, I think I'm going to post the link. Go ahead, Jared.
We do. There's actually one that popped up that I did want to ask because it was a little bit off topic of PPP, but I think it's something good for Frank to answer. And it says, off the PPP topic, what programs are available to landlords losing money from non-paying laid-off tenants? And I'm going to use that as the last one because I think we do have to move on. If you do have questions at the end, if Frank's still around, you can ask. If not, Frank's information is on the slide, and if you're open to answering them within reason, we can do that.
Sure. Thanks. And please, I was telling Ann earlier, by no means am I coming here doing a commercial for Milliard Bank. I feel as though one of the more important things of a community banker is to be that resource. Of course, over time, we hope we earn business with folks we share information with, but we really need to be that resource and educator out there. So feel free to email me anytime, text me anytime. The question is a difficult one. I'm not aware of any specific programs as it pertains to the SBA, but of course, if you are friendly with your banker, you could always go in and ask for a working capital line of credit. If you have existing loans now, and as we all know, we can't evict and everything else at the moment, talk to your banker. Ask him or her if they're willing to move you to interest only. That's important. Banks usually do not like to do that because then it triggers something called a troubled debt restructure, which is a whole different problem internally. But during these difficult times, the regulators are being a little more flexible. So if you're making a common sense request of your banker, it's likely the banker will make a common sense decision and move you to interest only. They're not going to necessarily waive the entire payment. They want to see you continue to make some payments, but at least they'll take the bite out of that monthly payment by waiving that principal or at least deferring it. Sorry, I wish I had a better answer for you on that, Jared, but thanks for the opportunity.
All good. Thank you so much, Frank. I did not pay Frank to help me with the segue, but thank you so much for coming and helping everybody. If you do want to stay, you're more than welcome. But thank you, everybody. I know everyone's muted, but appreciate it.
Thank you.
Frank,
and the
appreciate it.
Thank you, Frank.
All right, all. Good to see you. Thanks for having me.
Thanks, Frank.
Thank you, Frank. To Frank's segue, one of the things you just talked about is the inability to evict people. And we have Richard Vetstein to actually talk about that next. So Richard, if you want to say hi and jump in, please.
Sure thing. Hopefully everyone can hear me. And I will start sharing my screen, Jared, if that's okay.
Yep.
Okay, give me 1 sec. Yep, so while this loads up, okay, here we go. And I'm just gonna play it. So, yep, my name's Richard Vetstein. Some of you know me. I've spoken at a couple of these meetings in person before the COVID crisis. I have been monitoring the situation in terms of legislation that is affecting the landlord-tenant industry, and also working on some other things regarding COVID-19, including the Remote Notarization Act. But we've been monitoring the eviction and foreclosure moratorium, which was just signed into law yesterday by Governor Baker. The backstory is this has been rumbling since the COVID crisis started, and frankly, kind of the big lobbying organizations on our side, Greater Boston Real Estate Board and some others, were kind of behind the 8 ball in terms of pushing back on this. And because there's a lot of things on their wish list for COVID. So this kind of got lost in the shuffle between the cracks, even though to me, this is the most impactful COVID related bill that's been passed so far that's affected the real estate industry. And in combination with the legislature not really meeting in formal session, they've been doing in informal sessions. They've been doing a lot kind of remotely, so not as many legislators are required to vote on these things in the informal sessions. Long and the short is this got through, and now it's law. And Mike McCarthy was one of the state legislators who sponsored it, and he's going around bragging on Twitter that Massachusetts is now the #1 toughest state against landlords in the COVID-19 era because of this eviction moratorium. So we have that dubious distinction. So I want to go over an overview of what the the act provides. It's it's sweeping. It's unprecedented. I don't think we certainly, as far as my research goes, have never seen something that is so blatantly violative of one subset of potential litigants' due process than this, because it singles out property owners and landlords and basically shuts the courthouse door on them. And that's, to my knowledge, never happened before in the Commonwealth, even through, world wars and everything else. So we're living in unprecedented times, and certainly this is an unprecedented legislative action. So I'll go over it here. The basic, the gist of it is it basically stops evictions in their tracks. It stops them from being filed. It stops them that are already in process in court. And it even goes so far as to stop the sending of notices to quit and notices to terminate. So, and I'll get into that later, but so it applies to, I would say 80% of all evictions, could be more. So all non-payment evictions are covered, all no-fault evictions. So those would be your 30-day tenancy at wills that a landlord wants to terminate. It would also apply to a holdover tenant where a lease expires and the landlord wants the tenant to leave. It would apply in that situation. So the landlord would be unable to evict a holdover tenant. It applies to a post-foreclosure eviction. And it also applies to for-cause evictions, which would be lease violations or behavioral issues or criminal activity, but there's a carve out. It's only criminal activity or a lease violation which impacts the health and safety of other residents or first responders. So it has to affect other people. So if you have, like, I don't know, smoking, for example, or marijuana smoking, or something that may not necessarily affect other residents, but certainly would affect the lease premises, that potentially would be covered by the moratorium, and the landlord would not be able to evict the tenant. So, across the board, very, very broad brush here, applying to just about everything under the sun. It applies to both residential and commercial evictions, and they come up with this new definition of a small business eviction, and the small business would apply to any in-state corporate, well, it doesn't have to be a corporation either. It could be sole proprietor, LLC, corporate, whatever entity, either for-profit or non-profit. And the catch is less than 150 full-time equivalent employees. So that's actually quite a large business. I wouldn't call 150 employees a small business, not in my book. So those would also be protected from eviction, even if they don't pay. It does not apply to companies that are operating in multiple states internationally or publicly traded companies. So the big chains, it would not apply to, but those companies like Bruce Chris and Shake Shack, they're already getting PPE funds, so you really don't have to worry about them. It's really the smaller businesses that aren't necessarily getting the stimulus funds, as the last speaker spoke about, that this would apply to, and the landlord wouldn't be able to evict them. So we turn the slide here, and again, not only are we talking the inability to access the court, but they're even going a step forward and saying, and this just applies to residential. So residential landlords cannot issue any notice to quit or any notice of termination whatsoever. So this is a real problem because sometimes just the sending of a notice of default or terminate can get a tenant to pay without having to go through the eviction, but we can't even do that. So commercial leases, you can send a notice of default or termination, but essentially you're still stuck in the same predicament because you can't go to court and evict. So that really doesn't do much. Like I said, all the courts, both housing and district court, will not be accepting any new eviction filings. So the clerk's office is shut down. You try to file it, they won't accept it. To me, that's just unprecedented. Never seen that before. In terms of cases that are already pending, previous housing court order, basically all evictions have been, for the most part, stayed until May 4th. We were able to move some emergency matters, restraining orders or code violations, that sort of thing. They were letting those be processed under the emergency provision of the standing order. But while this act is in effect, and we'll get into that in the next slide, so during the full pendency of the state of emergency and 45 days thereafter, subject to the governor extending it for 90 days or more, eviction cases that are already pending cannot be prosecuted. And it even goes so far as to say a judge can't issue a default judgment, a judge can't issue a execution, a move out order, a judge basically can't do anything. And that, again, is unprecedented, a legislative interference with what's supposed to be the sole and exclusive right of the judiciary to conduct their own business. And that's one of the grounds that we feel is ripe for a legal challenge, which I'll get into after that. Also, all court deadlines and statute of limitations are suspended. So if we're running up against any deadlines with evictions, if you've already served a summary process complaint, you haven't filed it yet, that is told, so you would be able to file it once the moratorium is lifted. So that's good, at least. Also, late fees for unpaid rent are now prohibited. Doesn't matter how late they are. Those are prohibited. It had to be 30-day waiting period on the late fees, but no more. Also, and this is just unreal, you cannot report a delinquency to the credit reporting agencies if the tenant provides documentation of financial hardship relating to the COVID crisis. So we'll see how that shakes up. And my advice to all landlords is going to be don't do any credit reporting. There's also an attorney general new rule in place with regard to debt collection in the COVID crisis, and the feds are on that too. So I'm just advising all my clients to be very careful in terms of debt collection practices. Don't put anything in writing at all, text, email, nothing. Just don't do it. If you want to call a tenant, you can do that, but I just be very careful because they're going to be really cracking down on that. The bone that the state reps threw us, which is not really a bone at all, that they're saying you can use the last month's deposit to pay for your mortgage and property expenses, but then you have to account for it at the end of the tenancy. So it's almost like a forbearance. So I don't see any point in doing that because you're just going to have to give it back to them at the end of the term. So it's like you're borrowing from the tenant and having to pay it back. And we all know the last month's rent, the security deposit statute carries triple damages and attorney's fees. So I would stay the hell away from that. That's worthless. So in terms of how long this is going to be in place for, obviously subject to a legal challenge, but it could be quite long. So it's going to be in place during the governor's state of emergency and 45 days after that. And we heard today that schools were closing. My sources in the State House are telling me that the governor is going to extend the state of emergency for at least another 30 days. And he's going to successively roll out 30-day increments. So my feeling in talking to people in the know is that, it could be into June or maybe later before the state of emergency is lifted. And he can keep a state of emergency in effect while also lessening the social distancing and opening businesses. Like, it's not, those aren't tied together necessarily, because a lot of these new legislation are tied to the state of emergency. So if Baker wants to say, well, some people can go back to business, and like we're doing down in Georgia, he can still say we're going to keep this eviction moratorium in place until the economy recovers. So this has the potential to go on for quite some time. And in the act itself, it gives him authorization to extend it for 90-day periods, and that's his complete discretion. He doesn't even have to ask the legislature for permission to do that. He just can say, yep, another 90 days. So it's potential to go on for some time. Part of the bill is also a foreclosure moratorium, and this is where we're talking about kind of the equities of what's going on here. So as far as I'm reading it, it only applies to the straight residential mortgage situation, so a conventional homeowner mortgage. It would not apply to a rental property and investment mortgage necessarily. I know some people don't have an investment mortgage per se because they, started renting out the second unit or third unit or whatever, and they still have a quote unquote normal mortgage, even though technically I tell people that's a violation of the mortgage covenant. So, but in theory, the legislature is not giving rental property owners, the same equities in terms of letting them defer mortgage payments and letting them avoid foreclosure. So the effect is that the tenants are all the risk and the burden is going to be shifting from the tenants to the landlords. So they stop paying, you can't evict them, but yet us rental property owners, we have to pay our mortgage, but we're losing the rental income. So how are we going to pay our mortgage? How are we going to pay our real estate taxes? How are we going to pay for repairs? How are we going to pay for maintenance? All that stuff. There wasn't, well, maybe there was thought, but they made a decision that they were going to essentially F the property owner community here by not providing the same type of equitable relief. So it's going to have a pretty bad impact on all of us in this industry. I'm already seeing on Twitter and Facebook and folks at City Life and these, the tenant advocacy organizations, is they're telling these tenants that they can stop paying rent, even though the act specifically says the rental obligation, it's still due and owing, but without any teeth enforcement mechanisms, they're going to be able to get away with not paying rent for the foreseeable future. And even if you are able to file an eviction in 2 months, 3 months, 4 months, 5 months, whenever it is, and then you get a judgment against a bunch of deadbeat tenants, you're not going to be able to collect it, most likely. You can try, but so there's going to be a potential of big loss here, big loss, and there's nothing you can do about it except if we're successful in challenging the statute, this act. So myself and putting together an all-star team of landlord-tenant attorneys, including Jordana Rubman, Peter Vickery, Ted Papadopoulos. We've been working with the Mass Landlords Group, also in contact with the National Rental Housing Association, and putting together a game plan on how to challenge this act. And our initial due diligence is we've identified several avenues of attack, and we think they're actually quite strong. We obviously have due process and right to access to courts. Interesting enough, the Massachusetts state constitution is very much broader than the U.S. Constitution. The Mass Declaration of Rights, as it's called, is actually the first constitution that was enacted in the United States. And the U.S. Constitution was modeled after it. but it's actually quite broader than the U.S. Constitution. So we have something called equal protection, which is when you're favoring one group over the other. And we talked about the equities. We have Article 30, which is kind of like I call stay in your lane provision, where the legislature can't tell the judiciary what to do. I actually think that's our strongest argument, because a lot of the judges don't like being told what to do by pithy little state reps. And a bunch of statutes have been successfully challenged in Article 30 grounds. We have takings, so kind of like eminent domain. The government is kind of taking your property without just compensation. So this would be all the lost rent that would be lost during this. There's a contracts clause, which is government can't interfere with pre-existing contracts. That's the U.S. Constitution. So we have a lot of meat here on the bone, and what this case will go up to the SJC eventually. We're figuring out how to proceed strategically, the different paths to get to the SJC, but the SJC just handed down the decision on the ballot referendums and for COVID-19, and there's actually gave a signal that they might be in favor of a challenge. And even though that it's COVID-19, so you have this intersection of civil liberties, and we see it going around all over the country. And I'm not talking about these protesters out in Michigan and Ohio. This is kind of different. This is you have a fundamental right of due process to access the judiciary, even though there's a global pandemic. Whatever the judiciary can offer us, whether they're partially open or not, but you have a right to have your day in court, and the door can't be shut on one class of litigants while allowing other classes of litigants to proceed without any impediment. That's equal protection, and that's due process. So I think we have a strong chance of success. I'm hopeful, but I think also we don't have a choice in many ways, because the other major problem here is this opens the door. So it opens the door to having this done again. And this is kind of, it's like rent control. If there's a second wave of COVID, and a lot of the experts are saying there will be, even if Governor lifts the state of emergency, but 6 months from now or in this coming winter, we have another uptick, and then they say, oh, well, let's put the eviction moratorium back in place. Well, because we did it before, so there's precedent here. The next recession, well, we did it for COVID, so we can do it again. For rent control, again, it's a slippery slope, and that's what it's not so much, we're going to win this case or we're going to lose. It's we have to show these legislatures that they just can't go around and restrict our rights willy-nilly without there being some consequences, without there being some pushback, that when they're deliberating on this, they have to think, geez, are these landlord groups going to sue us, and will they win and embarrass us? And that's what I'm hoping is going to happen here. So we are organizing a legal challenge. We are trying to round up participants and plaintiffs and raise funds. Our goal is to raise $30,000. We've set up a secure GoFundMe, not GoFundMe, but a PayPal portal, and I can give that information to Nick and Ann to give to you folks. We have a fact sheet, and we really need as many people to spread the word around, because even if we have people donating $20 or $50 or $100, but if we get enough people, we can get to our goal, and we can file this suit. And I want to file it yesterday, but we need the funds. It's not, these things aren't cheap, and it's going to be a shitload of work, pardon my French, but we're in it to win it. And it would certainly be the highlight of my career, and I would be honored to have the opportunity to bring such an important case on behalf of such a great group of people. So I didn't know if turn to questions regarding specific provisions of the act. I'm happy to do that. So whatever you guys want to do here.
Sure. Well, thank you. Mike, were you gonna speak?
Say again?
I have an early question here. Does the moratorium apply to storage unit rentals or parking space leases?
As I read it, it would not. It applies to just pure residential housing.
Okay.
I just want to make a quick note. We are, first off, thank you, Rich, for all of that. This is an extremely pressing topic right now for a lot of investors. We are a little bit over time on your speaking section, so I want to do like maybe 5 minutes of question and answer. If you are available to stay after, I would very much appreciate it. And I think the audience would as well. Obviously, time permitting, but I think that's what we're going to do so we can get to all the speakers and be respectful of their time as well.
Not a problem.
There are a ton of questions, so let's pick like the 3 or 4, and then if Rich would like, maybe you can even answer them in the chat, Rich, and as we go, and we'll post.
Yeah. I can do that. Yeah, I can type it into the chat for sure.
Okay.
So I know this was answered during it, but Jane Hoffman said, "When is this till?" And I believe you said 45
When does it
days.
go till?
Yes.
Yeah, so it's a moving target. So the earliest would be 45 days after the state of emergency is lifted by the governor. But again, it can be extended for successive 90-day period. So unfortunately, the answer is we don't know. Could be a long time.
Actually, Rich, I have a question of my own. How does this law, how is it intended to work? You know, let's say in 45 days, whatever, 90 days, 4 months, the law expires or suspended, right? What happens to those 4 months? Now the tenants have to pay the 4 months at the end of when the law is suspended. I suspect I still am able to evict a tenant at that time, right?
Yeah, I mean, in theory, the tenants are still supposed to pay rent if they have the financial means to do so. But let's say hypothetically, if your tenant stops paying rent for say it's 4 months, and at the end of the emergency, when the moratorium is lifted, they owe rent, you would have to start, an eviction proceeding like you would any other tenant. So a 14-day notice to quit, then filing an eviction. The problem is there's going to be a massive backlog of cases. So in 4 months, we have 4 months worth of cases that might be backed up, and we're dealing with unprecedented economic instability. So we could be seeing, the biggest gold rush to ever hit the housing court that it's ever seen. And if you've been there, you've seen, Boston Housing Court, 200 cases on just a normal day, and that it could be 500, it could be 600. They do not have the capacity or the ability to handle that amount of cases. So the cases are going to drag on for some time, and then you're going to get legal services are going to be asking for jury trials, and you're talking months and months and months of cases that are going to be just in the system. So it's going to have a ripple effect that's going to last for like at least a year.
On that, I have one from Michael Craven. It says, what do you think the process will be when the courts open up? Kind of what you were just talking about, when they're bombarded with evictions for non-payment. Do you think they will super fund something like the RAFT program?
I mean, I think, again, the housing court is a court of limited jurisdiction and funding, and unless they're going to give them extra funding and get more judges or clerks, but it takes time to do that. So they're only, they're dealing with very limited resources. So they're going to try to get through them as quickly as they can, but it's just going to take a while. It's going to take many months. So
I'm going to combine a couple questions into one, Jared. There's a couple people. Number one, so with fighting it, Rich, in regards to fighting it, but if right now, if we can't fight it, if we're kind of just dealing as landlords the way it is right now, what can we as landlords do to try to deal with this right now? And should we be, are all these tenants going to still potentially owe this back rent once they're they're done. And and are we able to make them prove that it's COVID related for right now?
So the only, I caution you to have any discussions regarding owing rent or collecting rent against the tenants, because they're going to the potential to raise, this unfair debt collection practices, and you can't send out a notice to quit. So, and you can't, obviously, you can't report to credit agencies if they show you some documentation of a COVID-related financial hardship. Unfortunately, I think a lot of people are just, you're going to have to take it on people's honor that they're being affected. If they say you can't pay, there's really not much you can do, because you can't send a notice to quit, and you can't start an eviction. You can try to work with them in terms of giving them, kind of like the mortgage companies, deferment, say like, we'll cut you, how much can you afford right now? Let's cut the rent in half. And then we'll add it to the backside after, 3 or 4 months, do like a balloon payment, and you'll get caught up. You could do that and put it in writing, obviously. Cash for keys, someone asked me about that before. Nothing here bars you from doing any sort of private agreements. If you want to buy someone out and get them out, cash for keys. The only issue is that agreement isn't going to be enforceable in a court anytime soon. So if you do a cash for keys, make sure that they're fully moved out before that money gets handed over. So they're moved out, the place is spotless. They give you the keys drop in your hand. That's the only way that they're getting that check or cash. No escrows, no money in advance, and nothing like that. Because otherwise, there's, you make a deal, it's kind of not worth the paper it's written on right now.
Gotcha. Thank you. We found the same thing, whereas communication with the tenants has been key. We obviously, don't charge late fees. This is before this law came out. So now that this has come out, it's changed the game, like you said, and I think fighting it's a very viable option, but we're trying to over communicate as much as we can with our residents. We've obviously waived all late fees before this came out, and we're trying to sort of get behind it, saying, listen, if you're impacted, just let us know. And the way we look at it is kind of, we're the helpful squeaky wheel. They might pay us over, a credit card creditor. Like, as long as we're coming at it from a place of positivity and help, that's all we've done.
Yeah, I think if tenants see you as real people, not some faceless corporation that you have bills to pay, and you're a real person, I think that the chances of getting money are higher than if you're an equity residential and you already have a ton of money and a personal call or visit. I'm not saying you can't do that. Just got to be careful in terms of don't threaten them, and you got to pay, or that sort of thing. Just how can we work with you here? Help Jerry Maguire, help me, help you.
Yeah, gotcha. If you want to post the link, so Rich obviously has a hot topic today. He might be answering a couple of things in the group chat below. And I know this is kind of against Black Diamond policy, but I think, Rich, if you'd be open, and Jared and Ann, speak up if you will, but I'd be open to Rich posting a link or anything down at the bottom for his donations, if anybody would like to, donate to his cause. Ann or Jared or Daniel, are you guys okay with that?
Absolutely.
Okay. Awesome. So Rich, thank you very much for the quick turnaround on that one.
No, my pleasure. Good luck, everyone, and stay safe and stay healthy. We're all in this together.
Thank you so much, Rich. Really appreciate it. I have to say that was probably the fastest vote that we've ever had as Black Diamond Partners. Lynn, I want to throw it over to you. I will share my screen for you. Thank you so much again, Rich. Just so everyone knows, this is recorded, so you can look back later. Lynn, I want to invite you on, talk a little bit about 1031 exchange. We have good news for investors. So I'm going to unmute you now, and I'm going to share my screen again.
Thank you so much, and hello everyone. Thank you for joining us this evening. I am just sitting here listening to all the speakers and totally, I've got a page full of notes. So thank you so much for inviting me, Anne, and for the rest of the group for allowing me to join in. We're going to talk a little bit tonight about the new extensions that the Internal Revenue Service has released for the 1031 exchange deadlines. So before we get started, for those of you that I haven't met, my name is Lynne Bagby. I am a certified exchange specialist and division manager in New England for Asset Preservation, Inc. We are a national qualified intermediary and a wholly owned subsidiary of a major national title insurance firm. It's very important that you know the background of the QI that you're working with, because of the fact that when we have financial issues and things like that, it's important that the companies that you're working with have good financial backing, especially because at a 1031 exchange, we're holding your money. So that said, if you want to slip to the next slide, Jared, that'd be great. Thank you. In a normal 1031 exchange, your timeline for exchanging starts to the date of the sale. People need to recognize that in a 1031 exchange, that you're doing a tax election on a real estate transaction. So if you think about them, you've got two different things going on. You're taking a tax election on your real estate transaction. So all the negotiations you're normally doing with your purchase and sales contracts, both for your sale and your purchase, in the delayed format, you're simply trying to get your purchase to take place after your sale closes in the delayed format. So your timeline is going to start normally the date you close the sale of the property. In a normal exchange period, that's going to run 180 days is the deadline from the day you sell your property till the day that you close on your properly identified replacement properties, which you do need to identify by midnight of the 45th day from your sale. Please remember that these are calendar days, not business days, so weekends and holidays count. So because of this pandemic that we're in, groups like the National Association of Realtors, the Federation of Exchange Accommodators, and related industry partners had petitioned the IRS to allow extensions to take place, because those of you that own real estate or who are agents trying to get real estate sold, we've been hit with a whole plethora of obstacles. I know there's attorneys out there closing transactions in their parking lots on rainy days under tents, and the paralegals are all working out of the trunk of their cars. They're doing doorstep closings. I know lenders have new lending issues happening. So there's a whole lot of pieces of the real estate transaction that are being done differently and taking longer than normal. So for that reason, this petition was answered by the IRS, and on April 9th, 2020, they issued Revenue Notice 2020-23, which basically has extended the timelines for taxpayers for exchange periods that were to take place between April 1st and May 31st. But it's going to affect some other areas as well. So Jared, if you can go to the next slide, because the rest is a whole bunch of technical stuff that we don't need to read. So let's just talk about basically what's happening. So if the taxpayers' 45th day identification period or their 180-day exchange period takes place between April 1st and May 31st, they're going to get if it falls between April 1st and July 15th, they're going to get an extension on their identification period to July 15th. So for anybody that started an exchange, that had a closing date of February 16th, their 45th and 180th day would fall in that April 1st to July 15th timeframe. Additionally, taxpayers that engaged in the sale, their 45th day is going to go into that same time frame, as well as the 180th. The 180th day will go past it, so they'll keep that. And I'm going to go through some examples in a minute. So again, for those people that close after April 1st, their exchange, and between April 1st and May 31st, their 45-day identification period is going to go to July 15th. Their 180th day will stay the same. So what normally happens in an exchange, there's going to be documents that you sign. The money goes to the qualified intermediary. They usually issue you an account summary and your identification notice. So what happens is you're going to also now receive an extension notice as well. If you choose to, this is very important, if you choose to opt out of the extension because you're not going to take it, because maybe you decide not to exchange at your normal 45th day, you can contact the QI and they can give you your money back then because you're opting out of that extension to July 15th. So you will receive a notice from your qualified intermediary about that. Next slide, please. So I'd like to go through some examples. So for example, let's just say the taxpayer closes the relinquished property on April 5th, 2020. Their 45th day in their identification period is May 21st. Now remember, it's going to be extended to July 15th. The taxpayer must close on the replacement property by October 3rd, which is the 180th day. So they're getting an exchange on the ID period, but not on the exchange timeline. They'll still get their full 180 days, but there's no extension because the 180th day was past July 15th. So there's no extension there, just on the 45th day. Another example would be that the taxpayer's relinquished property closes on January 18th of 2000. They close then. The 45th day in their ID period is March 1st, 2020. Their 45th day would not be extended because their 45th day was March 1st. It was not in between the April 1st and the May 31st deadline. So their 180th day is July 14th, but that's going to be extended for 1 day. So no extension on the ID, but a 1-day extension on the 180th day. Next slide, please. Next slide. Thank you. So again, only the deadlines currently scheduled to occur between these two timelines, April 1st to July 15th. The notice does not address deadlines that fall between, that fall before or after the specific time period. Here's what's happening. This is a really unusual situation. Usually the IRS issues federally declared disaster notices, in which case they normally will, it's for when property is damaged, like a Hurricane Harvey, Hurricane Katrina, the fires in California. So there's a whole list of revenue procedures that pertain to Section 1031 that they look at, and they'll say which the specific counties it affects, and it'll say that 1031s are getting extended. This is the first time in history they've ever done anything for a health pandemic. Realizing that 1031 exchanges started in 1921, the Spanish flu was in 1918. So this is the only other big pandemic that we've had, and the first time they've issued extensions. So what's happening now is taxpayers who are involved in exchanging or who are planning to exchange need to make decisions based on the current guidance. There's a whole separate factors of other things that haven't been addressed that the real estate industry is actively petitioning the IRS to make some changes. For example, some people want to go back to the date that the government first started the pandemic notice, which was March 13th. They also are thinking about going back to the date of the Stafford Act, when President Trump enacted that. Those are all things being petitioned right now, but asset preservation will be keeping everybody abreast of the situation through LinkedIn. Everyone at Black Diamond in management, I'll be happy to get you that information as soon as I get it so that you can put it out to all of the members. So people that are involved in buy and hold properties that they're planning to exchange or in the middle one now will know if we're successful in getting any more legislation to help taxpayers that may have had something that closed before February 13th, where the timelines entered into those periods that don't get the extensions now. So I'm here for questions. And you can go to the next slide. My contact information, please send me an email if you think of something after this presentation tonight. Glad to answer at any time. I'm not billable by the hour, and I will take 1031 questions, through email or a phone call. Thanks.
I have a question here. I cannot find the question, but I hope I can remember it. Do you think there is any chance that the deadlines for purchasing OZ properties will also change, or this is only related to 1031 exchanges?
This right now is just related to 1031 exchange. I will go ahead and find you, Dan. I'll go ahead and find you anything that I can on opportunity zones and let you know what that might be. Because my specialty is 1031, I do have access to that information, but it's not something I regularly speak about. So I'll get it for you, okay?
Thank you.
Sure.
Okay.
Any other questions in the chat? There's 136 of you. Someone's got to have a question.
You know what? Right now, everybody's trying to keep their tenants, their tenants paying rent, learning about all those new things that affect, you know, people are still exchanging. Some deals have been set up prior to the pandemic and have been in play. Other people are calling because they're looking about, thinking about listing in May. So not the market that we expected this spring, but there's still transactions. I've got several clients that have multifamilies that are going on the market in May, but we'll see how that goes.
Well, I don't see any more questions. Thank you so much, Lynn, for speaking again. I know you've helped and spoken a few times at Black Diamond. We always appreciate having you and getting guidance and information from you. So thank you again.
Thank you so much for inviting me. It's always my pleasure. Thank you, everybody.
Thank you, Lynn.
All righty. Mike, it's all you now. If you want to do some introductions, I will bring over to your slide. And we're going to talk about some insurance, everyone's favorite topic.
So good evening, Black Diamond. My name is Michael Foster. I'm a risk advisor at Foster Sullivan Insurance Group. Foster Sullivan helps clients understand true cost of risk by completing comprehensive risk assessments of the company's or person's exposures. We then lay out risk management roadmap, and what that incorporates is purchasing the proper insurance coverage, promoting workplace safety if you have employees, and then installing different risk management techniques to minimize claims, lower expenses, and most importantly, increase profitability. So today, we've been getting a ton of calls from all of our insureds across multiple industries about COVID and how it affects their insurance. I'm going to start off with some statistics though, because insurance is a fear-based sales kind of organization, so I got to scare you before we go into anything else. So on average, 20% of tenants do not pay their rent on time. During the first week of April, that number jumped to 31% nationwide and was actually closer to 40% in most major cities. National unemployment numbers reached 22 million as of 4/16. And I was reading an article the other day that a Massachusetts policy analyst anticipates that another 500,000 Massachusetts workers could be laid off or furloughed by July. What that all means is a lot of people are losing their jobs. A lot of businesses are going to go under, and a lot of you, unfortunately, are going to start losing rents if you already haven't. So there is a clause in most of your policies, and I just want to, before getting any deeper, I just want to give a disclaimer that I'm going to be speaking generally. Everybody out there has different policies to manage their properties, and without reading the actual policy with your carrier, I cannot comment on that. So like I said, I'm just going to be speaking generally about insurance right now. So you can go to the next slide. So business interruption insurance, just a quick brief introduction 101 on what it actually is. So it pays for the actual loss of business income or a profit and extra expenses incurred to a suspension of your operations. So the suspension must be caused by direct damage or a direct physical loss to the property listed on the declaration pages. So example of direct damage would be fire, lightning, wind, flood, earthquake, etc. Direct physical loss is hard to define. I included a recent court case on how they defined it, which is some external force must have acted upon the insured property to cause a physical change in the condition of the property, must have been damaged within the common understanding of that term. So a quick example, easiest one, you have just a three unit apartment building, it burns down. You have your building insurance, which is going to pay to replace the building. Well, what happens though, that's going to take six months to a year to do. What happens to all the loss of rents that you had? That's where business interruption comes in. This coverage is going to come in and pay that lost rents that you missed out on because you no longer have a building. It also pay for any extra expenses you incurred during the loss. So we've been getting a lot of calls saying COVID is interrupting my business, or COVID is, I'm not getting paid by tenants. Isn't there coverage? Unfortunately, the short answer is no. If you want to go to the next slide, please. Because after the SARS outbreak back in 2003, the insurance companies realized that something like this might happen. So they put in a clause or an exclusion in pretty much every policy that excludes any coverage due to virus, bacterium, or other microorganism that induces or is capable of inducing physical distress, illness, or disease. Unfortunately, COVID-19 falls under this exclusion. So in most policies, or a majority of the policies, there is no coverage. You can go to the next slide. Another key thing that clients ask about is, well, the government shut me down. Is there any coverage for that? Normally, yes. It's called civil authority coverage. And that pays for the actual loss of business income and extra expense caused by an actual civil authority that prohibits access to the described premises. So the claim must meet the below three elements, which one, it must prohibit access, which with the state's orders and the national orders, sure that can be covered. The second one though, and the third, it must be covered cause of loss. And again, the same virus exclusion comes in and doesn't give coverage. So the short answer is there's no coverage right now to protect you or to cover any of your losses, but there is a little bit of bright hope, if you want to go to the next page, in terms of legislation action. So starting about, I think 3 weeks ago, New Jersey was the first state to pass a bill, but now I think it's up to 9 states have proposed bills to make insurance companies cover business interruption losses, regardless of what the policy language says. The specific Massachusetts bill is named SD 2888, if you want to Google that and read more about it. But a quick synopsis of it is the proposed bill states that insurers in Massachusetts may not deny a claim for business interruption insurance because COVID-19 is a virus, even if the relevant insurance policy excludes losses resulting from the virus. Also under the proposed bill, insurers also may not deny COVID-19 related business interruption claims if there's a lack of physical damage to the insurance property or to any other relevant property. So basically what that's saying is the bill is like, we don't care what the policy says, whether you can prove there's physical damage or not, because as it's a virus, it's very hard to prove whether it's there or not. And just because there's an exclusion, we're going to overturn that. There is no time frame on when the vote will take place. The bill was proposed 2 weeks ago, so I'm still waiting. As I'm sure you're all aware, the state has a ton of things that they're doing right now, so I'm not sure when a vote will take place. We can go to the next. If a vote does take place and it passes, which it looks like it has support to pass as of now, whether the insurance companies challenge that and whether the payments is a whole different question. But these are some losses that you could file for. So loss of rents. So if your property has been shut down due to COVID-19 and you have suffered a loss of tenants and therefore rent, that's a loss of business income. You can file a claim for that, whether it be in a commercial spot where a business goes out and they leave, or in the personal where tenants stop paying rent. You can also do file a claim for cleaning expenses. So if you had to clean your building or decontaminate it because of any kind of COVID tenants, anything like that, that's an extra expense incurred due to COVID-19. That would be covered as well. I'm sure there's a multitude of others, but those are the 2 big ones that I think most property owners would see. Go to the next slide. So in closing, there may be coverage under your policy. Like I said, without reviewing your actual policy, you'll have to do that with your agent and your insurance company. And Massachusetts has a bill proposed, no vote yet. And just some closing words of advice: be prepared to file your claim. So that means document. Claims adjusters want to see as much documentation as possible. There's no such thing as giving them too much information. I have provided Black Diamond with a sample worksheet that can help you track your losses. Get in touch with your agent, make sure you have the proper policy and claim information ready to file a claim. I'm sure most of you remember the winter of 2015 with all the ice dams and how hard it was to get a claim payment. This is going to be 10 times worse. If these laws pass, the insurance companies are going to be so bogged down in claims that it's going to be a nightmare to get paid. So the people who have the most information, who file first, are going to be the first ones to get paid. If you don't have the proper information and the claims adjuster has to go back, you're going to go to the bottom of the stack, and they're not going to get back to your claim for a while. So all I can say is be prepared with as much documentation as you can. And just listening, I wanted to name two more things because Frank was talking about all these new tenant laws that are going into effect and how they have so many more rights. Double check on your policy that you have tenant discrimination coverage, because a lot of these tenants, I could foresee that if you try to get them to pay their rent, they could easily countersue you, saying you discriminated against them for one way or another, and then you're gonna have to pay for lawsuit coverage. And a lot of property policies do have some tenant discrimination coverage in there to help you with legal fees for that. So I would double check on that. And then also just premium relief. A lot of insurance companies are giving, they're forgoing payments. They're getting, forgiving late fees and letting people get on payment plans. So if you're having trouble making your payment, call your insurance company. They're being very, very forgiving with payments right now. But that's all I got. If there's any questions, more than happy to take them.
I have a few. Thank you so much, Mike. I very much appreciate it. Taking the time out of your day. I know you were last, so thank you for bearing with us and sticking through to the end. Marina has, is there any statistics as the percentage of rent non-payment by class of property? And then also just on that, I guess, where is the scope that you're looking at? Is it just Massachusetts or is it all of New England?
So those statistics I was just reading, I believe one was from the New York Times, one was from the Wall Street Journal, that were speaking about national tenants. So that it's not regionally specific.
Okay. And then from Anne, I don't know why Anne is not unmuting herself, but she says, again, you're speaking about Massachusetts, but have you heard any pending legislation in other New England states? Because Black Diamond covers the whole spectrum of New England, anything about New Hampshire and some of the other.
So Massachusetts is the only New England state that has passed one right now. Like I said, there's 8 or 9 states now that have done it, with majority of them being in the Northeast. So New York, New Jersey, Pennsylvania, California are the ones. I assume that the other New England states will be quick to follow. This is kind of going, they're kind of waiting to see what other states, how they're drafting their bills, because each state has a different bill on how it actually goes. Massachusetts is the broadest of them so far. So I think a lot of states are playing the wait and see game to see if this actually passes and how they're going to structure their bill going forward. But I wouldn't be surprised to not see these bills in other states. And if not, some implication on a federal level as well.
Awesome. Any other questions for our speakers tonight? I think Lynn's still here, Mike is still here, and I'm not sure if Frank has left us, and I'm not sure if Richard has left us.
I have a comment. So the worksheet that you mentioned, Michael, we can, Jared, you have that, right?
Yes, I do.
Yeah, okay. We can post that in the file section on the insider group.
Yep, that's just a general worksheet that just helps people to ask some questions about what they need to keep track of. But yeah, that's more than welcome to share. It's public knowledge.
And Lynn, if you have a chart or something, like just like a one sheet data, like with the date changes and stuff like that, we'd be happy to post that too.
Yeah, sure. I actually do have some charts done that have examples. So there's 2 of them actually. So I'll get them over to you, Ann.
Yeah, so anybody that's still on the call, we'll put those in the file section of the Black Diamond REI Insiders. And also this presentation will be there as well.
I actually have one question for Mike. Are the coverages you mentioned typically only found in investment property insurance policies, or I guess general housing insurance?
No, so business interruption is a very standard coverage across the board for whether you're in manufacturing, construction, transportation, restaurant. It's a common coverage.
Okay.
So obviously it's a huge coverage right now with restaurants being completely shut down and not having any sales. But yeah, it's a standard coverage.
So here's an example. Let's say somebody has a 3-unit that they bought in their own name using regular residential financing, and they live in one of them. Would their policy, so that'd be a regular residential homeowner policy with 2 additional rental units, would their policy have loss of rent?
So again, generally speaking, if it was just a homeowner's policy, so an HO with a number, no. But if it was on a dwelling fire, yes, there is coverage. Again, that's why it's tough to know because every company has different policy language. So I can speak generally, but specifically, it may not be the case for most. But yeah, if you have a dwelling fire or if you have a 4+ unit, those are normally on business owners' policies. They definitely have the coverage. Most dwelling fires do, but if you're in a just a single family rental home, you might not have the coverage.
Awesome. Okay.
Great info, Mike. Thank you very much.
Is Rich still on? Can we tell?
I think he dropped.
He dropped. Okay. All right, great.
So, some of us have to eat, not me, you know. I think that's all the questions. I'll give another minute or two for questions, just general questions. Maybe anyone in the audience might want to answer if we can see on the chat. But otherwise, I want to thank all the speakers who are still here for coming tonight. We really appreciate it and helping us put on these events.
You forgot the deal section.
The deal section.
We almost
You're
did
right,
the
Daniel.
section.
If
Thank
anyone has a deal, I will if you post and send me a private, I will unmute you so you could talk about it.
Good point.
Thank you, Daniel.
And I'm hoping that obviously a huge thank you to our speakers for offering their time and their expertise tonight. I'm hoping that our attendees are finding value on these weekly sessions because we're kind of doing all we can to try to put information front and center during this challenging time. And with information comes knowledge, with knowledge comes power, and with power comes only if you act on it, right, with action. So we'd love to get your feedback, whether it's on the Black Diamond Facebook group or just in our chat box here locally or shooting us emails. We'd love input, and we'd love if you specifically have questions or speakers or topics that you would like to see covered. Let us know, and we will seek out the appropriate professionals to make sure we try to spread that information. Am I correct in assuming, Jared, Ann, and Daniel, someone had promised a weekly session, which I think is a good idea. We're doing this again next week, same time?
Nick, you promised it.
I don't believe I did, but I'm happy we are doing
sure
that.
We're just deciding it was you.
One thing that we can chat offline about what we can present, but I was able to get access to some very solid national data from the John Burns Group on what's happening in the real estate specific, but also the national economy as of right now. So that might be relevant. We might go over that next week, but otherwise, please let us know, our attendees, what you'd like to hear from and what professionals you'd like to have on.
And there are some people that have.
I got some deals.
Yeah, I've got some.
I got Stephen Alaski. I'm going to unmute you. You should be able to talk now.
Hi, hope everybody's doing well and feeling well. I have a couple projects. One's in Cambridge where there's no tenants, but they'll give a 2-year, I'm understanding is they'll give a 2-year lease guarantee with an escrow. So there's no issue about evictions or whatever. That should be enough time to get through this virus stuff, if you know what I'm saying. Be glad to give you my information. It's Steve Olaski, and it's 781-899-5277. And I have 2 other projects, one in Wichita, Kansas, 134 units, 3 buildings, 7 capped and remodeled, and there's management available. And then I have a project up in Cleveland of a property with management available as well. These are multifamilies. So let me know if you're interested, raise your hand or something, or just reach out to me. I'll type my address again on the chat box.
What's the Cleveland deal specifically, Stephen? How many units is it?
I'm getting information now. I have 2 groups that are giving me product, and they're able to manage. And then there's some, not to get off on a tangent, over in Chicago and Chicago South, there's a group there as well. But I'll type my information in for everybody.
Perfect. Thank you so much, Steve. All right, I'm gonna mute you again, and David Dowd. Mr. David, I have going to unmute you and have you speak. You should be able to speak now. Thank you, Stephen, by the way.
Thank you very much, and good evening, everybody. And thank you, as usual, Black Diamond, for hosting a great meeting. My name's David Dowd. Thank you for giving me an opportunity to wear my cowboy hat tonight. I've been isolating at home. So I have two deals. One is in Marlboro. It's a waterfront lot with an existing foundation on it that's 24 by 60 feet long. It had some permitting issues, which I am in the process of appealing to the Zoning Board of Appeals. And the foundation is great because it just eliminates a lot of your cost, and the price is attractive as well. I'm planning to put a modular home on it, but the foundation is capped with a ceiling now. There's really more appropriate for stick built, and it's 9 feet tall on the basement floor, which has a garage, and you could build 2 floors above it. Again, waterfront in Marlboro. The asking price on that would be $195,000, which is, excuse me, $295,000, $295,000, which is a great price for a lot in Marlboro, not to mention the fact that it's on the lake. So, so that's one. And my number is, by the way, 774-696-6124. I'll repeat that at the end. The other is an unusual property in Boston. It's in Roxbury near the South Boston line. It's a 3-family that would be either a gut rehab or a tear down. It's a little complicated, so I'm not going to take up much time, but it's kind of an island surrounded by land that's owned by the city of Boston. And so it's got some severe restrictions. If an owner occupant would not be that restricted, but anybody wanting to tear it down or rebuild would be subject to the Dudley Street neighborhood group approvals and other approvals. So it's not for the usual investor. I don't want to take up too much time, but it could be the kingpin of a property development project where the city would potentially sell the other lots to a developer for less money, but it'd be a transparent public process. So it's a long situation. Without taking up any more time, you should contact me, David Dowd, 774-696-6124 on either of those properties, or David at sellmomshouse.com, like you're selling your mother's house, David at sellmomshouse.com. Thank you very much. Good luck to everybody in this crisis.
Okay. I think that's everybody, right, Jared?
Well, no, Marilyn Savage has deals.
Okay, hi. Everything okay? Am I on?
Yep.
Okay, thanks. So I've got a couple of different things. I have a plot of land up in Andover. A builder picked up a lot. He's got approval to split it in half, and he wants to sell the other half. So it's approximately $275 for the plot of land, but the builder will actually, if you want, you can use him to actually build the second house. He's rehabbing the house on the first plot and selling the land for the second one. I've got a couple of 2 families and a 3-family. I've got a 2-family in Malden at 646 that actually could be rentable now. I would, if it were me, I would change out the appliances in one of the units. But it's rentable now, or you could turn them into condos. That's a 2-family, nice, very little work needed, if at all. Just I would just look at the kitchen on the first floor. And then there's a 3-family in Malden at 685, and I think that needs work completely, outside and inside. But it is a 3-family, and it's got 3,500, actually 3,548 square feet on it. It's already got 6 bedrooms and 4.5 baths. Then I've got some two in Boston, actually. One is in East Boston, and it's a 4-unit that I'm aware of. Somebody else it has it off market, asked me to help sell it. I said, fine. If you're looking for a 4-unit in East Boston, we have that. And so that's kind of where we are. So my name is Marilyn Savage. My email is marilynesavage@gmail.com. My number is 781-775-7882. So if anybody has some interest in any of these things, give me a call or send me a note. Thank you. Stay well, everybody, and God bless.
Thanks, Marilyn.
Thanks, Marilyn.
Yep.
I have another one from Nawaz Azam. Hopefully I'm saying that right. He does, or they do not have a mic, but I'm going to say this on behalf of them. They have 3 to 5 unit buildings totaling 15 units in Claremont, New Hampshire. They are asking $250,000, which is $16,000 per unit. And they've requested that if you're interested, please contact them at nawazazam@hotmail.com or by phone at 603-848-3540. Again, it's 603-848-3540. And Nawaz, if you want, you can post that on the insiders group. And if you want to post your information on the general chat, that would be helpful as well.
Awesome.
I have 2 people that raised their hands. I don't know if they actually have a property or a question, but please send me a message if you do.
I think the raising of the hands was when one of the speakers asked for people to raise hands if they are interested. So we'll let that happen offline. But I want to take a minute to say that if you guys have ideas or of topics for next week, or if it's something that you're curious about and you want more information about, any of that, or you know someone who can speak about something that you think is of interest to the group, let us know, rather quickly, so that we can try to fit it in next week's meeting.
Agreed. Nikan, anything that you want to comment on?
No, good. Well, the only thing I guess I would ask, I sort of felt like there were a lot more questions for Rich that didn't get answered because we only had so much time. And I'm just wondering, of course, we don't know if he would be interested or not, but would it be worth having him back for an encore on some more questions? And how do people feel about that? So I'm just asking for opinions on that.
If you have opinions on it, please put it in the chat. It just helps us know.
Don't bother, or yes, you want to hear him again, or whatever.
And again, to Daniel's point, any topics or people that you think might be helpful in speaking, we appreciate it. We love bringing this to you guys. We think it's, again, as Nick mentioned, one of our responsibilities as one of the groups in Massachusetts and greater New England area to get you guys the information you need, especially right now where there's so much information to go around, and getting it condensed in one area for investors is difficult. So we love putting these on for you guys, and we appreciate you guys joining in.
The best and brightest group, Jared, in New England for real estate investors.
Exactly.
Coming at you live. So I'll wrap that up then on that same note. Folks, we really appreciate, again, another huge hand for our speakers for dedicating their time and expertise today, and to all of you amazing folks for spending your Tuesday night. I'm really hoping we brought value, and please feel free to add your opinions and comments on our Facebook group, Black Diamond REI Insiders, as well as just shooting us an email. Hope we brought value, hope we continue to bring value, and we'll see you next Tuesday night, 6 p.m., same bat time, different link though. You'll have to re-register again for a new link, and we'll see you next week. So thanks so much.
Thanks, everybody. Record attendance tonight too. And thanks, over 100 people stuck with us all the way to the end. So.
And if you're not, again, as Nick mentioned, 2,600 people in the Facebook group, Black Diamond REI Insiders, great place to be.
Good night, everybody.
Good night, everybody.
Good night, all. Thank you.